Hi there, welcome to the Introduction to Financial Literacy. We'll also talk about the Creative Roots company-wide and departmental financial scoreboards. But before you get started with this, please make sure you've watched Charlie Wayne's What is Financial Literacy video. The link was in the internet. If you've watched that, great. If you haven't, stop and go back and do that. All right, we'll carry on. So the learning objectives, this model is designed to help you better understand what financial literacy is and have a basic understanding of our departmental and company-wide financial scoreboards. So you've watched this video. It's just a beginner's guide. There's lots more to learn. It's got lots of information in there that is sort of fast and of course, informative. So anyway, I just wanted to do a bit of a summary on what he talked about, and then we'll get into the scoreboards. So what is financial literacy? As Charlie Wayne says, it's the knowledge and skills to make smart money decisions in your personal finances. Knowledge and skills to help us better manage our money to ensure our best possible financial future. Who doesn't want that? I thought, just ponder for a moment. Are you controlling your money or is it controlling you? Just think about that for a second. Wouldn't it be nice to feel like you're in control of your money? That's what financial literacy is all about. Have confidence and control and be able to manage your money. So the basic terms that Charlie was talking about is we've got income, money that's coming in, earned actively or passively. Investing is a way to earn money while you sleep, passively. Savings, that's the money that's left over after all the spending. And spending, oh, we can spend so well. Watch that money go. So is your relationship with money energizing or depleting? There's so many different ways to earn money. And I just wonder, how many ways do you earn money? From our 9-to-5 job, or in our case, 7-to-5 job, from profit income, selling stuff to make more than what you bought it for, interest income at the bank, savings accounts, bonds, guaranteed investment certificates, dividend income, rental income, capital gains, royalty income, getting paid for allowing someone to use your stuff. Boy, there's so many ways. So passive income, Charlie was talking about investing in the stock market, where you have capital gains when your value of your stocks increases over time, dividends from dividend paying companies. And then he talked about the power of compounding. That's where your money earns money. It's very cool. So it's self-directed. You can do it yourself, or you can pay a fee and use a robo-advisor. You'll need to have an account set up. And he was talking about tax-free savings account, which all of the gains in there are tax-free. So that's great. There is a limit on it though. Real estate, if you're not priced out of the market. And then if you're unable to afford the real estate, he talked also about the REITs, to the real estate investment trust funds, and then investing in a business like Creative Roots. Saving money. Yeah, how do you save money? Spend less than you make. And a great way to start is by budgeting. Create a spending plan for your money. It includes your needs, your wants, your debts, savings, and investments. Make a plan and pay yourself first. Make it automatic. Get an automatic transfer from your checking account to your savings account with every paycheck. Just put it away. And make sure that that checking or that savings account is actually earning some decent interest. And check on the rates your bank is charging. Don't go use banks just because mom used the bank. Find a bank that's not charging you bank charges. And have an emergency fund. What if you are injured skiing and you can't work for 6 months? What are you going to do? Have an emergency fund. It's a good idea. And then protect yourself financially with insurance. So insurance on your property. Most of the financial institutions we have are covered. So that's a problem. Right. And then there's spending. And I wonder, and I challenge you to track your spending for a month. Awareness is a real change accelerator. Once you are aware of where all your money is going, you'll be more inclined to make a change for the better. Of course, we have to spend money on just survival things: housing, food, insurance, transportation, entertainment, paying off debts. And Charlie was also talking about different ways of spending through cash, debit cards, credit cards, prepaid cards. And I think he had a good point in that credit cards build credit if you manage them well. But it's super important to pay them off every month because the interest on them is huge. So another good question to ponder is, what if you patched the holes in your wallet? What opportunities would open up for you? So now that we have a little bit of an idea of what financial literacy is and what's involved in terms of your income, spending, and savings, I just wanted to sort of circle back to how that compares to a company's finances to help us understand the scoreboards at Creative Roots in particular. So your personal finances, you earn income, you deduct the spending, and that equals your savings. Simple equation. And for the company, it's the same thing. They earn income, they deduct the spending, and it equals a net profit. So if we go a little bit deeper into a personal example, let's say your income is $20,000 a month. And in this particular month, your spending was $1,800, rent and gas and food, insurance, gym, etc. So your savings equals $200. Income minus spending equals savings. And a company example, same idea, just bigger numbers. So the earned income in this particular month is $50,000. And that comes from selling products and services. And then you deduct minus the spending. So the cost of making those sales, the materials, the labor, the subcontract. And then also the cost that's outside of making those sales, the property rental, vehicle repairs, phones, utilities, etc. So the total spending or the total expenses for that month is $30,000. So if we take the income minus the spending, it equals the net profit. And in this case, it's $20,000. So when you track your income, spending, and savings each month, it would look something like this on a financial scoreboard. So we have our monthly income, we have monthly expenses or spending, and the balance would be your savings. We list the items out. And these are the actual numbers of what they've had in that month. So when we look at Creative Roots, we do the same thing. Each department has their own financial scoreboard, and those 3 departments, maintenance, construction, and design, those scoreboards are combined onto the company-wide financial scoreboard. So let's look at those a little deeper. So on the departmental scoreboard, we track income, spending, and profit. It's the same thing. Looks a little intimidating, but let's look at it a little closer. On the top, we have the months in the black. And the months and the quarters. You can see there is quarter 1 is January, February, March. Quarter 2 is the next 3 months, etc. The second line there, we've got revenue, which is the same as income. That is all our earnings for the sales that we've made to our clients, what we've invoiced them for. And then we have 3 items that are all the spending, the cost of doing the sales. So labor, materials and equipment rental, and subcontract. And we add those 3 together to get the total cost of goods sold, COGS, the total spending for the department. And so we have our income, we deduct the spending, and we end up with a profit. And on the bottom of each board, we also have a year-to-date profit, which is a cumulative profit number that just adds one month to the next month. So once again, we have the departmental scoreboard, income minus expenses equals the profit. The only thing that's different here is we have that cost of goods sold, and that's the total of the expenses for the department. It's COGS. That's all that means. All right. So then each of the departments has one of those boards, and we bring it into the company-wide net profit board that looks like this. Let's break that down. It also has months on the top, very much the same. And then it takes the profit from each of the departments and adds them together. So we have design profit plus construction profit plus maintenance profit for a total profit. And then we minus or deduct the spending. And in this case, the spending is all the items that are not directly related to the cost of the sales. So not the COGS, this is all the other things like rent, phone, bank charges, payroll expenses for the people that work in the office that are not in any of the departments, that sort of thing. And then that equals net profit. So we add all the 3 profits together to get total profit. We deduct the spending, the overhead expenses, and that equals net profit. And once again, we have year-to-date net profit on the bottom. So let's just have a quick summary. Financial literacy is skills, knowledge that helps us make informed and effective decisions with all of our financial resources. Our 3 departmental and 1 company-wide financial scoreboards do exactly the same as your personal financial scoreboard. They calculate income minus expenses or spending, and that equals your savings or our profit. So if you'd like to do a little bit more learning, Charlie Wayne, I noticed he had a bunch of useful links below the video in his YouTube channel that might help you get a little bit more information. There's a lot more information out there. You can always ask questions as well. Reach out to me, Ryan, Matt, Jacob. We're all very familiar with this. We will be doing more of a deeper dive into the company scoreboards, and we'll also be learning more about the profit share and how it's calculated. As Charlie said, though, practicing is the best way to learn. So get out there and practice. Oops. All right. Thank you very much for joining me on this one. And please send any questions, comments, or suggestions to me at my email address. Thank you.